Good morning, students.
Good
Welcome
morning,
back.
sir.
Hi, good morning. So today we plan to cover some more topics. Just quickly share this presentation. Do we have? All right, so I'll just share this document with you. Okay, chapter 2 is what we plan to cover today. Now, in relation to this chapter, there are few auditing standards that we'll look at. I'd say some of them are very important. If you look at the auditing standard in relation to consideration of fraud, SA 214, very important in respect of any audit considerations in relation to the fraud risk becomes important on the part of the auditor. Why? Because this may have a huge bearing on the financial statements of any company. The other topic will be about consideration of laws and regulations, again important. SA 260. Now this essay talks about communication of the auditor with TCWG. Yeah. Now again, this is one area wherein a lot of deliberation is taking place as to how the auditor should really be communicating with TCWG. Okay, so the interaction between TCWG and auditor, how should that be set up? Okay, what should be the frequency? Currently, if you look at the things practically, even though the communication is taking place, but it may not be the one which is really required. So you can say the level of involvement of the TCWG in respect of discussions as around the audit related matters, this is something which is expected to be enhanced. So that's why we'll talk about it as to what is there in this auditing standard, what does it require, and as to how the things practically stand on the ground. And again, I would say this is one very important area, considering that today's times wherein this particular area is quite focused upon. Okay, then of course we have two more auditing standards. One is about the joint audit, and the other one is about the considerations relating to an entity which is using a service organization. So it's all about service entity considerations which are really required to be given over. So quickly, let's do a quick revision of all of these auditing standards one by one, and we'll also be picking up questions around it. Yeah. Now, so I'll just start with this auditing standard 240, which is about considerations related to the fraud. Now, what is the objective? See, the objective over here is to get on to the risk of material misstatement which could be there due to fraud. Yeah. So that's the objective for the auditor, to find out if there are any such risks, so that auditor can plan his audit procedures in relation to mitigation of those risks, or to avoid any sort of material misstatement which may arise on the financial statements due to such type of risk. Okay, now the question arises, what is this fraud? See, fraud, we can say, is an error. Yeah. So when you talk about the financial statements, so there has to be an error. Error means something which is going to have some financial impact on the financial statements. Correct? Now, in relation to such error, the important point is that this is the one which arises intentionally. Unlike any other error which could be there, say for example, there's some totaling mistake, some arithmetical mistake could be there in the financial statements. Okay, maybe some classification was wrong, but that was unintentional. When it comes to fraud, over here we are talking about those mistakes, those errors which are there in the financial statements intentionally. Means these have been deliberately done by the entity. Okay, so that's the feature, you can say, which is there in respect of a fraud. And that is why it becomes all the more difficult for the auditor to identify such error. And that is why we are saying that this risk of material misstatement becomes all the more important. Why? Because its detection is going to be difficult. Why? Because the people are involved. It will be a collusion. Yeah. So wherein they are doing this thoughtfully, they have planned as to what are the risks which are possible. How can the other person really track this? So that's why this is one area which is something which the auditor will have to focus upon. Now, in relation to this fraud, let's try to understand as to what are the types. Now, again, for the purposes of our discussion, this fraud has been categorized. So we may have fraud which is related to financial reporting. Okay, so it's all about fraudulent financial reporting. And the other one is all about misappropriation of assets. Yeah. So can you help me understand, first of all, what is the meaning of fraudulent financial reporting? Means, what is your understanding of this type of fraud? Over to you. Over to you. Fraudulent financial reporting. What do you mean by this type of fraud? What is your understanding about fraudulent financial reporting? Yes, Lee.
Misstatements due to in the preparation of the financial statements.
Okay. What type of misstatements are you talking about? Because if, let's suppose, there's a misstatement in the financial statement, let's suppose inventory should have been valued at rupees 2 crore, but this has been valued at 2.2 crore. So will you say it's a fraudulent financial reporting? Tell me.
No, sir.
Okay.
Not
so
really.
then, okay. So then you need to, I think, further elaborate. What do you mean by this statement in the financial statements?
It means that the financial statements are prepared in such a manner with either to reflect a position of the entity which is better position than what it really is, so that to present a wrong picture to the users of the financial statements, with the idea to attract in investments or to make a concealment of the income to avoid
Okay.
taxes and all.
Okay.
Deliberately and intentionally.
Okay.
By the management.
All right. So can you give me some examples of this type of financial reporting? Any example that comes to your mind? Anyone else who can help him, who can add to this? Any example, any instance which you can
Showing
talk about?
personal expenses, showing personal expenditure as a business expenditure. Like
Okay. By the management, you're saying, is it?
yes.
Okay. So how does it really help the management if the personal expenses are shown as part of business expenses? So how
They
are
are
they
getting
going?
individual gain, no? Means their expenses are shown in the business expenses, means that income will be reduced, and whatever others said, the tax benefit they will get maybe.
All right.
In that way.
Any other instance?
Sir,
Any other
related party transactions
Okay, what do you mean by related party transactions?
which are not reflected in the financial statements, which are not shown either.
So you're saying during the year company had some related party transactions,
Correct, sir.
but they didn't
And-
disclose.
Or they were not disclosed at the correct value.
Okay, they were not disclosed at the. So you are saying that transactions were not executed at the correct value. In fact, I think you are trying to say they were not at arm's length. Is it?
Yes, sir.
All right. So now, as regards fraudulent financial reporting, now as the terminology suggests, it's about financial reporting, means the books of accounts are prepared, financial statements are prepared in a manner which is fraudulent. Now, the important part is fraudulent, means something has been intentionally done in the financial statements to misstate them. For example, company wanted profits to be shown. So let's suppose it's a listed company. So they want to show higher profits during the quarter. So what can they do? They can inflate revenue. Maybe there is a revenue related to the next quarter, but that has been preponed to the current quarter. So if the revenue goes up, the profitability will also go up. Some of the expenses which have been incurred by the company, they have not been recognized. So as a result of this, what will happen? Profits will go up. Similarly, there could be certain entities who want to evade taxes. So that's why what do they do? They may be booking higher expenses. Correct? Yeah. Maybe some of the presentation criteria, some of the disclosures which are important, they have been intentionally not presented. They have not been disclosed in the financial statements. Okay? Just to again not give the complete clarity to the stakeholders. Now, all of these are examples of what? Fraudulent financial. Now, financial reporting has to go wrong. And that has to be intentional on the part of the management. The moment you have this, what do you call it as? Fraudulent financial. Okay. Now, there's another type of fraud, misappropriation of assets. Can you help me understand what is this fraud? Misappropriation of assets. What do you mean by this? Anyone? Misappropriation of assets. Anyone?
Showing
Yes.
current asset as non-current like that, or non-current asset as a current like that.
Okay, but
Yes.
okay, so if you talk about this presentation, in a way you are talking about the presentation, you're saying will have wrong presentation in the financial statements.
Wrong presentation.
Right? So don't you think it's something which will be related to the financial reporting? Yes or no?
Yes.
So we are talking about misappropriation of assets, which has to be other than fraudulent financial reporting.
Okay.
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 So anyone else who can just add to this?
Suppose if the asset to be recorded as a capital asset, instead of that capitalizing, if the asset is recognized as a revenue, then immediately on the first year itself, it goes for the reducing the profit.
So here again, if we look at the example, don't you think it's all about recognition of an item, or you can say it's about incorrect recognition of an item in the books of accounts or the financial statements, which eventually is related to the fraudulent financial reporting only? Yes or no?
Yes, sir.
Yeah, so we are talking about those misstatements which are not resulting from fraudulent financial report. We are talking about those misstatements which are resulting from misappropriation of assets. So what is that? Okay, so let's try to understand. I'll give you some examples. What is a misappropriation of assets? For example, there is cash embezzlement by the cashier. Okay. Maybe some of the assets of the company, of the entity have been stolen. So what do you call it as? Misappropriation of assets. Now here again, there is a peculiarity in relation to misappropriation of assets. See, if you look at any company, any entity, if you talk about, you will not find that when it comes to the assets, so any large sized assets are getting stolen. No. See, whenever a fraud is committed, fraud is generally committed in respect of small ticket items. Do you think it will be possible for anyone to steal or to take away the plant and machinery of the company? Do you think it will be possible? Answer is no.
No.
That will not be possible. Do you think it will be possible for anybody to take away the building? No. So that's why when it comes to the misappropriation of assets, that is something you will always find in respect of small assets. For example, laptop, desktop is there, mouse pad is there, yeah, keypad is there, stationery, if at all, that is in the nature of capital asset. Yeah. So some of these type of assets which are misappropriated, that is what they consider within this category. Okay. Now, both the types of assets will have some financial impact on the financial statements. Now the question arises, what leads to the fraud? Yes or no? Yeah, what leads to the fraud? Now, if the auditor were to track this, if the auditor has to get on to this fraud, so how will the auditor be looking into it? See, as regards the fraud, now the important point is to understand as to why the fraud will be taking place. There are a lot of reasons because of which fraud may take place. There could be incentives, pressures. For example, profits of the company have been going down year on year. But there is a lot of pressure on the top management to show good profits, to show good performance of the company. Yes or no? Yeah. Or maybe if you look at the compensation of some of the employees, particularly the top management, that is linked to the performance of the company. So what do? If they show higher sales, they get more salary in a way. Yeah. So that can lead to, or you can say that can be one of the ways this fraud can also be looked at. Means there could also be a pressure and there could also be an incentive. Okay. So some of the risk factors which you need to consider as around the fraud. Now this is very, very important. See, the fraud will never take place if the opportunity is not there. So that's why it is again important to understand that it's not only about the incentives or the pressures which will lead to a fraud. There has to be an opportunity. Okay, that is when you get into a fraud. For example, if let's suppose if you talk about a company, therein some of the employees are not very satisfied and they are planning to get into some fraud. So will it be possible for those employees to commit any sort of fraud? We don't know. Yeah. If let's suppose we talk about a company which has got strong controls, they've got good systems in place, each and every transaction is validated. Okay. So in such a case, even if the employees are planning to commit a fraud, do you think it will be easy on their part? Answer is no. Now, as compared to this, if you think about a company wherein the controls are weak, in fact, the systems are not in place. Okay, systems are not in place, controls are weak. So in such a case, employees get an opportunity. Yes or no? Yeah. Now, opportunity around what? Opportunity around some fraudulent acts. Okay. So some of these fraud risk factors, whether they are resulting from any sort of incentives, pressures, any of the opportunities which could be there in the organization, all of these things become important part of the auditor. Can you tell me how will the auditor get to know about these things? Any thoughts? Any thoughts? How will the auditor get to know about these things? So what should the auditor do if let's suppose we are talking about say incentives, we are talking about these risks. Okay. Now, as an auditor, what is it that you need to look at? Over to you. Tell me.
Internal control of the entity.
Yes, very
He will
important
look.
part. See, eventually, it comes down to the controls. Of course, when it comes to the audit, substantive testing will also be performed. But through the substantive testing only, this process cannot be taken care of. So that's why to take care of the process, what is important? To have a strong controls in place by the management, not by the auditor, by the management. So that's why if the auditor has to evaluate this risk, what does he need to do? He needs to plan well. In a very simple manner, we can say he needs to plan well. He needs to plan properly. So what does it mean? He needs to understand the entity, its process. Okay, what all activities are involved in the entity? What all systems do they have? Okay, what are the risks which the management has identified? And what are the controls which the management has put in place in respect of those risks? Further, whether such controls are operating in an effective manner or not. Now you may be thinking that is it not about general planning? So how can we relate that to fraud risk? Or how can we relate that to this consideration of fraud? Because eventually the basis of the audit is not going to change. Understood? See, whether it's a fraud risk factor or any other risk factor, the basis of audit will always remain same. Audit will not change to investigation. Yes or no? Yeah. So that's why the basic premise of the audit you always need to consider. And if you are performing your audit in line with what is required to be done, then of course, some of these type of fraud risk factors will also be picked up by the auditor. Okay, yeah. Now, as regards the risk assessment, when it comes to any sort of company, so there are a couple of areas, I would say, which are considered to be fraud risk areas, be it any entity. Can you tell me what are those two areas which will always be considered to be a fraud risk area? Over to you. Over to you. Yes, quickly. In relation to any entities, couple of areas are considered to be fraud risk areas. Anyone having any understanding of those two areas? Quickly.
Cash receipt and payment.
Cash receipts and payments. Okay. What about others? Quickly. All right. So let's try to understand revenue recognition. Is the revenue recognition important for an entity or not? Answer is yes. In fact, the most important process, the most important area in the financial statements for any type of entity will be what? Revenue recognition always. Revenue recognition, do you consider this to be a significant risk? Tell me. When you do your risk assessment, do you consider this to be a significant risk?
Yes, sir.
Yes. Do you consider this as significant risk because the risk is significant? Answer is yes, but it's also a presumed significant risk. Presumed means you don't need to get into the details. By default, it is considered to be a significant risk for any type of entity, and by default, it is also considered to be a risk wherein fraud may also take place. Please remember, we are talking about risk. We are not talking about fraud taking place. So there's a risk that fraud could be there. So revenue recognition is one area wherein it is presumed. Presumed around what? Around fraud risk. So that's why whenever you plan your procedures in respect of revenue recognition, what do? You'll have this consideration of fraud risk. Okay. And that's why you do a lot of procedures in respect of revenue recognition. Okay. So that's one. Next area. Again, a very important critical area as far as the financial statements are concerned. And what is that? Management override of controls. Have you heard about this or not? Management override of controls. This is also considered to be a fraud risk area. And that is why for any entity, while finalizing its financial statements as an auditor, or you can say while auditing the financial statements of any entity, two areas over which fraud risk considerations will always be given are what? Revenue recognition and management override of controls. Can you please help me understand what is management override of controls? Over to you.
Sir, management recording the significant and unusual transaction, which means the fictitious journal entries, and putting the complex transaction in the combined journal entries like that.
Okay. Anyone else?
Sir, going more than above their authority, sir. Like if there is a 50 lakh limit, if they go above that 50 lakh limit and sign, that is a overhead of control.
Very good. So management, if you look at for any company, see, eventually when we are looking at any sort of fraud, or if let's suppose you are looking at any sort of error means misstatement. Now, how will that be taken care of? When such risk is identified by the management. That's what begin with. Further, management will put a control in place so that such risk will be reduced. Okay, so it's the management which is taking care of each and every risk which exists in relation to various types of activities within the organization. Correct? Therefore, if the management itself decides to commit the fraud, so they are in a very sweet position in a way. Yeah. Why? Because they can bypass some of the controls which they have set up. Yes or no? They can override their own controls. So management is in a position to do that. That's why this risk cannot be ignored by the auditor. Auditor cannot say that the management is always is working towards, you can say management is always good. Yeah, in a very simple manner we can say that. They can also be involved in these fraudulent activities. So this risk, therefore, needs to be considered by the audit. But you call it as management override of controls. It means management overriding its own controls. And that's why auditor needs to plan procedures to take care of this type of risk as well. So what will the auditor do? Auditor will have to look at journal entries. Auditor will have to look at some of the assumptions, estimates, judgments. Yeah. Some of the areas wherein this type of risk may have some impact. Yeah. So the procedures around it need to be planned by the auditor. Again, this will vary from entity to entity. So you cannot have a standardized list of procedures in relation to these type of entities. But again, this is one area which is very critical to the audit of financial statements of any entity. Okay, yeah, clear on this? Now, as around this area again, now similar to what we discussed in case of fraud, similar to what we discussed in case of revenue. Here again, how will the auditor plan his procedures? How the auditor is going to take care of such type of risks? Here again, the auditor will have to apply similar thoughts. He'll have to understand the entity well. See, eventually it all comes down to understanding of the entity. Because if you understand that well, that is where you will identify the risks which are. Yes or no? Because if you don't understand, you will not be able to identify the risk. Now you may be thinking, but this identification of risk has to be done by the management, which is true. But what if they have not identified? What if they have identified, but that is not given to you or that is not disclosed to you? Yeah. So as an auditor, you need to evaluate that. You need to ensure that something which is provided to you is complete, is correct. And that is only possible when you have the similar sort of understanding, or at least the understanding which the management has got as far as its activities or the processes are concerned. Okay. Yeah. Now, as around this consideration, as around the procedures, there are a lot of factors which the auditor will consider. Now, sometimes what may happen is, at times, let's suppose there is a concern. For example, there are some exceptional circumstances as a result of the fraud or the suspected fraud, because of which auditor may be considering whether he needs to continue on the audit or not. Okay, so in this case, what is it that the auditor will have to do? Auditor will have to look at, first of all, that is it legally permissible for the auditor to withdraw? If yes, of course he can withdraw. If it is not legally permissible, then of course he will have to continue. If the auditor will withdraw, he will have to have communications with the TCWG management as around the withdrawal, or wherever applicable, the relevant authorities as well. See, now what is the concern? The concern could be the fraud. When it comes to the fraud, if let's suppose the fraud is detected in the organization, so the auditor is required to communicate that. So can you tell me what are the communication requirements in relation to the fraud? So where will this fraud be reported by the auditor? Over to you. Over to you quickly. Quickly. Yes.
It will be reflecting in our opinions or audit opinion, and 143 subsection 12 reporting will be there.
Okay, so that's one. What else?
No, auditor will first of all communicate to the management and TCWG about the findings which he has obtained regarding the fraud, and seek their opinion about it, whether to understand whether there is an involvement of the management or not in respect of such items,
Right.
and then assess whether he can continue in this in the audit or not. For continuing in this audit, he will have to seek the legal opinion, or whether it is permissible to withdraw or not.
Okay.
And then he may give a modified or qualified opinion based upon the findings if he has to continue.
Okay.
If it is not permissible for him to withdraw from the assignment, then the report has to be issued accordingly, giving the qualifications.
Do you think that qualification has to be there for sure whenever there will be a fraud?
Only when there is a material misstatement which is pervasive, sir.
The fraud itself is a material, no? Fraud itself will be material. So we cannot say it is an immaterial, because ultimately fraud has to, it is coming from the top. Either the management would have taken corrective action. That is the first step. He communicated to the management, then they would have given a proper explanation to them, to the auditor. If the management is unable to provide him the proper reasoning, then it means that there is a management involvement in that.
Okay, so let me give you one example, and that is what we can discuss. Let's suppose during the year, one fraud was detected. What was the fraud? Generally, very commonly, what do you find? Cashier or the one who is handling banks. Okay, that particular employee or maybe that group of employees were involved in the fraud. As far as the management is concerned, they were not aware of that. Of course, there must be some problems within the system around the controls, but the management was not aware of that. Okay, and there's a cash embezzlement, let's suppose. Say it's a large size company, quite significantly large. Turnover was approximately 2000 crore. Good profitability. They have some, I think, 15% margins. Asset size is also quite big. And it was found that there was a cash embezzlement of rupees 10 lakhs. So will you get into a qualification as an auditor in such a case?
No, sir, since we have come to know that the management is not involved. That
Are
part is,
you now categorizing your reporting on the basis of the fact that whether the management is aware? If you say management is aware, I'll qualify. If the management is not aware, I'll not qualify. Is that the basis of qualification? Or can that be the basis of qualification? Answer is no. Okay. So now what is going to be the basis of qualification or the modification? Material mistake. So that's what we need to consider all this. Number one. Now, coming back to these aspects related to communication. See, of course, if there is any fraud, now many a times, if you look at the fraud, it may have been detected by the management only. And the management may communicate about the fraud to the auditor itself. Okay? Generally, it's not the auditor who is finding the fraud, because that's not the role of the auditor. Generally, what you find, that it's the management who has informed the auditor. So in such a case, what are the responsibilities? So if there is any regulatory requirement, of course, the auditor will have to communicate about it. Internally, he needs to, if the management has come to the auditor will have to communicate about this to TCWG. Auditor will have to also look at the reporting implications. Reporting implications means in his main audit report, whether it should be reported or not. But there is one part of the audit report that is what you call as CARO. CARO will specifically address this point. Whether any fraud on the company or by the company. Yes or no?
Yes,
Yeah.
sir. Cost, yes, sir.
Right. So
Specifically
in
mentioned.
CARO, you will have this reporting of fraud. Okay. Yeah. So in CARO, you will have the reporting of fraud. Clear? Everyone clear?
Yes, sir. Also, we have section 143, subsection 12. It
Right.
specifically talks about if the value of fraud is less than 1 crore, then
Right.
we have to report to board or the audit committee within 2 days.
Correct.
We have to wait for their replies for 45 days.
Right.
If the amount is more than 1 crore, then
Right.
we have to, the auditor should report to central government.
Right.
Yes, sir.
Now, in that case, once again, you have to evaluate, okay, what is the quantum, what is the amount involved, and whether you are communicating to TCWG, to the regulators, okay, you are discussing that with the management or not. Eventually, the auditor will also have to look at the reporting implications as far as his audit opinion is concerned. Okay, so that part is something which the auditor needs to always consider. All right. Clear? Okay, so now let's move on to the next auditing standard, consideration of laws and regulations. I think Mr. Ravi has a query. Yes, Ravi.
Sir, what is the difference between fraud at financial level and assertion level, sir?
Your voice is very low.
Sir, I want to ask what is the difference between fraud at financial statement level and fraud at assertion level, sir?
See,
Difference
fraud at
between-
financial statement level, one can say, is something which is pervasive in nature. I would put it in this manner. Means something which flows down to the entire set of financial statements, which is not limited to any particular area, and within that area also, which is not limited to any particular assertion. See, assertion is a very small area. For example, if you talk about PPE, Okay, or let me just pick up inventory. Now, inventory is only one area in the financial statements, not the complete financial statements. And for the inventory, there are various assertions. Existence is one assertion. Valuation is one assertion. Presentation and disclosure is one assertion. So if let's suppose there is any fraud, or let me just put it as misstatement. If there is any misstatement which is only impacting one of the assertions, let's suppose inventory you have physically counted, it's there. So as far as its existence is concerned, as an auditor, you are absolutely comfortable. But when it comes to its valuation, you are not happy. You are saying somewhere in the valuation there is an error. So what do you call it as? Tell me. Misstatement related to assertion. Which assertion? Valuation of inventory. Are we clear on this?
Yes, sir.
Okay. But if let's suppose you talk about any misstatement which is there in the financial statements at the financial statement level. So of course, this misstatement which is there in valuation of inventory, this will also flow to the financial statement. Okay. But this is limited to one area, unlike financial statements as a whole. So that's how you need to look at it. Okay.
Sir, if the inventory is a major part of the financial statement, then it will also cover financial statement level fraud?
Yes, you would say that. Of course.
Okay. Okay, sir.
Okay.
Okay, thank you, sir.
Yeah. What else, Ravi?
No, sir. Thank you, sir.
Sure. Now, see, the other auditing standard I would say is quite generic to a certain extent. I'm just calling it as generic because I think around audit we have already discussed in the past. See, the audit is all about three things largely. One, accounting standards. So as an auditor, you check whether the management is looking at or applying the accounting standards or not. Second is applicable laws and regulations. So as an auditor, you are also required to check whether the applicable laws and regulations have been complied by the entity in relation to its financial statements or not. So a mixture of these two will give you a set of financial statements on which you will also apply your audit procedures, or you can say you will apply your auditing standards. Yes or no? Yeah. Now, consideration of all of these laws and regulations. This is very important. Why? Because if you don't look at the laws and regulations, then somewhere in the financial statement there could be an error. There could be an error, right? Now, question arises, whose responsibility is this? So we understand that it's all responsibility of the management only. So as far as the financial statements are concerned, it's the responsibility of management always. Correct?
Yes, sir. Primary responsibility to prevent and detect fraud is with the management and those charged with the governance.
Correct. And even if now, see, in fact, okay, what I'll just try to do is I'll just link some more auditing standards over here. See, this entire audit, even though you are looking at this audit in the form of various auditing standards, in the form of various chapters, audit is one activity, actually. Even if you talk about a lot of audit activities, a lot of auditing standards, a lot of chapters, they are all interlinked. Okay, now we are talking about management responsibility, primary responsibility, about laws and regulations. Now tell me one thing, when you read internal control, when you read the definition of internal control, does it include laws and regulations? Tell me. Does it include the consideration of laws and regulations or not? If
Yes,
you
sir.
go back to the definition of internal
Yes, sir.
control, does it include that?
Yes, sir.
Yes, sir.
Yes or no?
Yes,
Yeah.
sir.
So therefore, one needs to understand that once again, we are reaching the same point. That as an auditor, we need to look at the internal control system of the organization. The only point is now we are just trying to specifically focus on the point related to laws and regulations. But what is that law and regulation? That has to be a system, that has to be a process of the management. And that is nothing but a part of internal control system. Okay? Yeah. So this has to be put in place by the management. Now, as an auditor, what do we need to check? First of all, again, we need to understand. Because for us to check, for us to examine, for us to verify, we need to have a clarity around that. Because till the time we do not have the clarity, how do we check it? How do we get into the details? We will not be able to do that. Correct. Now, laws and regulations could at times be very peculiar to an entity. And I think it's good we have covered banks, we have covered NBFCs. So if you look at some of these types of entities, for example, insurance, they are not only subject to different types of general laws and regulations. I'm saying general, for example, Companies Act, that will apply to all types of companies. Income tax, that will apply to almost every type of entity. Yes or no? You may also have some specific laws and regulations for a telecom company. Okay, so the laws and regulations could be very specific to its business. For insurance, we understand it's all about looking at ILDI, yeah, which comes from its regulator ILDA. For the banks, we discussed it's the Banking Regulation Act, RBI Act. There are so many acts. In fact, the list doesn't come to an end. Now, as an auditor, what do we need to have? We need to have an understanding about those laws and regulations, which are applicable on the entity and which will have a bearing on its financial statements. Because eventually, what is our objective? Our objective is not to look at the operations. Our objective is to look at the financial statements and to check if the financial statements are free from material mistake. Okay. Now, generally, if you look at some of these laws and regulations, in these cases, you will not only go by the amount in them. So what does it mean? Means if let's suppose there's an error, okay, so you'll be looking at whether the error is something which is running in a significant number. Means you will not only be looking at the quantitative criteria for evaluation of this. Why? Because that may not be appropriate. Because this area is more of qualitative in nature. Okay, this is more of qualitative in nature. Yeah. So that's why in these cases, when it comes to the laws and regulations, okay, for which the company has to comply with, auditor will not only be looking at the quantitative criteria, auditor will also be looking at the qualitative aspects. Because once again, this can have a huge impact on the financial statements. Okay, so if you look at the responsibilities, now what are the responsibilities? Responsibilities relating to compliance with laws and regulations. Responsibilities related to laws and regulations that do not have a direct effect on determination of amounts and disclosures, but their compliance may be fundamental. Now, can you give me one example of any such law and regulation whose compliance is going to be fundamental to the operations of the business? Over to you.
Say example, labor laws and say example, PF, ESI. These are the normal laws. They have to follow it by the
Okay,
company.
right. And what about the fundamental? So, any example of the one which you find fundamental? Over to you.
Environmental law.
Environmental law. Okay,
Which is operating aspect of the business, how the company is running their business, what are the
right.
laws are applicable to that particular company, whether they
Right.
are in line with those laws and regulation.
Okay. Anyone else? Yes, quickly. Any example that comes to your mind for this? Okay, so if you look at once again CARO requirements. Okay, so if you talk about NBFCs or some of the companies like this, what do they need? They need a license to operate. Yes or no? So what if they do not have the license? Can they really operate as NBFC? Answer is no.
No.
Right? So will you find any direct effect of such type of compliance on the determination of amount or any sort of amount in the financial statements, any disclosure in the financial statements? No. But will you say that their compliance is fundamental to the operations of the entity? Answer is yes. Why? Because that is the one without which the company cannot operate. It is not allowed to operate. Yeah. Okay. So that's why both the types of consideration are important. Now you may be thinking that does it mean that the auditor will have to get onto the operations? He'll have to go beyond the financial statements. The answer is yes, to a certain extent, in relation to compliance of those laws and regulations which are fundamental to the business. Let's suppose today you start the audit of a company and you understand that the company is into pharma business. Okay, you are appointed as auditor for the first time, or let's suppose you are a new auditor. So how do you know whether the company has got the license for this pharma business or not? When you have an understanding that for a company to operate into the pharma business, they need a license. So as an auditor, you'll always want to look at it. Yes or no? Because that is very fundamental to their business. Clear? Clear in this? Yeah? Yeah, so some of these aspects therefore become important. Now here again, for you to get into such sort of misstatements, any sort of non-compliance, what do you need? Once again, understanding about the processes, about the activities, about the understanding of the laws and regulations, which will be provided to you by the management only. Of course, you may have some experience of that particular industry, basis which you'll also be knowing that what are the laws and regulations which will apply to this particular company within the same sort of industry or not. Okay, but that's an important consideration on the part of the auditor. And if let's suppose there is any sort of non-compliance, then what do? You'll have to once again evaluate. You'll have to evaluate the impact of such non-compliance on your reporting requirements. Yeah. and its communication, its discussion with the management will of course be taking place. You also need to evaluate whether such communication has to be there with those charged with governance or not, whether there are any regulatory requirements due to which you are required to communicate that to any sort of regulator or not. Okay. Yeah. So some of these considerations become important on the part of the auditor. All right. Everyone clear on this? Any questions, any doubts so far?
So there are two aspects on it. One, those which have a direct impact, laws which have a direct impact, and laws which do not have a direct impact. So they have to be assessed separate, differently by the auditor. No?
So what do you mean by they have to be assessed differently? What is the meaning of this differently?
Respect of laws which do not have a direct impact, auditor will have to see whether there is a non-compliance with those laws and regulations.
Correct. So if I have to put down this in the form of various steps, so I would say first thing on the part of the auditor will be what? To obtain the understanding of laws and regulations. Yes or no? Or you can say to prepare a sort of checklist as to which all laws, regulations are applicable on the company. Because that is going to be your first step. That is how you will get to know that whether you are looking at all the applicable laws and regulations or not. Something which are meant to be looked at by the auditor. Okay, the way we just discussed. So that is going to be your first step. Once you have this step in place, okay, once you have this detail available, you have this understanding of it available, of course, then you can apply your procedures in terms of their compliance by the entity or not, and in terms of their any impact which could be there in the financial statements for which you may have some reporting implications as an audit. Okay.
Yes, sir.
Okay, so now moving on to the next one. Now, next one, as we touched upon beginning also, see, this is quite critical. Can you tell me what is those charged with governance? What is your understanding of TCWG? Over to you, anyone? What is TCWG? Anyone? What do you understand by TCWG?
Those who oversee the activities of management.
Okay. Anyone else? TCWG?
So chairman, managing director, audit committees.
Okay.
Sir, TGW, those assist the auditor in understanding the entity and its environment and identifying the appropriate resource for audit evidence. Who is helping the specific transaction or event
Right.
from the management side.
Okay. To put it in a very simple manner, I would say for a company, it has to be audit committee or the board of directors. Okay. One who is charged with the governance role. Okay, and what is that? Audit committee. Wherever applicable, of course, audit committee is not applicable for each and every company. Board of directors. Now, let me just give you some practical insights and through which we can also get some more clarity around this particular topic. See, this auditing standard requires auditor to communicate with TCWG. Now, I'm sure some of you must have had some audit experience. So when you get into an audit, so has somebody audited the financial statements of a company? Tell me. Anyone? Anyone who has audited the financial statements of a company?
Yes, sir.
Okay, very good. So tell me one thing, when you have audited the financial statements of a company, as an auditor, who do you interact with mostly? So let's suppose you spend 1 month on the audit. So who do you interact with?
Finance head, finance person.
Finance head. Okay, so you're saying the finance team. Okay,
Yes.
so that's one. What else?
Director who is in charge for that.
Okay, so you are saying the function head. That's what you
Yes,
can
sir.
say.
Yes, sir.
Okay. Okay, what else? So as an auditor, mostly or the most of the time which the auditor will spend, he will be interacting with whom? Management. So can we say that or not? It's the management with whom the auditor is interacting.
Yes, sir.
Now, what does this management include? It could be the CFO, it could be the functional head. Now, it's not necessarily limited to finance. So for your understanding related to sales, you may reach out to sales team. Okay.
Yes.
You may also be talking to the HR team or the HR head. Yeah. But there is a problem in an audit process. What is that? As far as the interaction of the auditor is concerned, very limited communication goes on between the auditor. Now, who is the auditor? Of course, it's the audit partner, and TCWG, means the board of directors or the audit. So do they interact with each other? Hardly. So they interact hardly with each other. So you may be thinking, but sir, if let's suppose the audit team is say 25 persons, so does it mean that all those 25% should go and meet the board of directors, audit committee? Answer is no. In fact, that is not the expectation, but at least the audit partner should be interacting with them, because they are the one who are the end responsible persons. Yes or no? They are the one who are entrusted with this responsibility related to financial reporting. Yes or no? And with those persons, or you can say with audit committee, board of directors, auditor is hardly having any interaction. So this standard talks about the need for interaction between these two parties. Who are that? Audit partner and TCWG. This standard also lays down that what should be the minimum communication level. It's not about time. It's all about areas, the communications which the auditor need to have the TCWG. In today's times, okay, when you have a lot of regulatory developments taking place, there's a lot of focus on this particular area by the regulators. Now, what is the focus? Focus is that as regards this interaction between these two parties, this has to increase significantly. If the financial reporting has to improve, then definitely this has to increase significantly. Okay, and that is where this area becomes all the more. Now, what are the areas which need to be communicated by the auditor to TCWG? See, there are certain aspects. When it comes to audit, of course, as an auditor, you can't just go on and take up your audit working file with TCWG, because the time is not going to be so much. And the objective is not to run through this entire audit file, or maybe it's important to have that discussion. Because if that doesn't take place, that doesn't help this entire audit process. Yeah. So that's why, what should the auditor do? Auditor has to communicate with TCWG in respect of its responsibilities. Okay. Means, what were the responsibilities of the auditor? Yeah. What were the management responsibilities? Planned scope and timing means when the auditor would have planned his work. Okay. So what was the scope? Whether it is statutory audit, tax audit, or any other scope of work. What are the timelines? Okay, what is the period which is getting audited? Now, in relation to the planning, what are the significant risk areas? What are the fraud risk areas which the auditor has planned? Because that is something which is on the part of the auditor, which he has assessed and which is important for the purposes of audit. When the auditor applied those procedures, whether there were any significant findings, means if there were any significant observations, including CAM, key audit matters. Now, CAM is not an observation. CAM is an audit matter. But that is important for the auditor. So that's why it's important that the auditor goes and discusses that with the TCWG. That these have been my findings. Okay? And these have been the areas which have taken significant effort or which were quite complex for me to deal with. Now, in relation to those significant areas, at times, what may happen is there may be a disconnect between the management and that may lead to some sort of modification. Why? Because the auditor believes it's a misstatement, management may believe it's not a misstatement. So how is the auditor going to handle that? So is the auditor thinking about any sort of modification, any reporting implications, if there is anything which the auditor wants to highlight upon in the form of emphasis of matter? So all of these things are what which the auditor will discuss with TCWG. All of these areas, you can say, are the communication matters on the part of auditor to TCWG. Okay, clear on this, everyone?
Sir, some example of significant risks, sir, please.
Sorry?
Some example of significant risks, sir.
Significant risk? In fact, you
Yes,
can
sir.
give me examples of significant risk we discussed today? Or anyone who will help him with the examples of significant risk?
Yeah, fraud itself is a significant risk.
Very good. So today we talked about significant risk, revenue recognition. Okay, management override. In relation to any entity, auditor will do the risk assessment. Any area could be considered by him as a significant risk, depending on his assessment. Consideration of laws and regulations could be a significant risk at times.
Misappropriation of asset.
Misappropriation of assets, of course, that's a fraud risk area. Okay, yeah. Similarly, inventory valuation could be a significant risk area. Similarly, depending on the nature of business, any other area, for example, litigations during the year, that could be a significant risk area. Okay, so there's no checklist which is available for the significant risk area. It's all about a matter of assessment. Any area, depending on the type of entity, depending on the complexity, depending on the processes which are involved, depending on the challenges which the auditor may face, depending on the financial reporting which the entity is following as a process, may become significant risk area. Okay. Yeah, everyone clear? Any questions? No? All right, so now let's move on to joint audit. So can you tell me what is your understanding of joint audit? Over to you. What do you understand about joint audit?
Sir, two or more auditor to conduct the audit.
Correct. So if let's suppose instead
Jointly.
of having only one audit firm, instead of having only one auditor, if the company engages two or more than two auditors, for the audit of financial statements. Now, financial statement is one. Yes or no? So that means 3 firms will jointly audit the financial statements. So what do you call it as? Joint audit.
Say
Can
example
you give
generally,
me some entities where you find this joint audit to be very common?
bank audit, bank central audit, central bank audit.
Very good. So bank audits, if you talk about PSUs, okay,
A government audit.
companies,
Yes, sir.
therein this joint audit is very, very common. Okay, yeah. So now the question arises that, sir, if the joint audit has to take place, then will it not lead to confusion or will it not lead to duplication? Why? Because same financial or statements will be audited by 3 firms. Same information will be required by 3 parties. So idea is that when you get into the joint audit, so you just try to share the responsibility, share the work, okay, so that this duplication doesn't take place. At the same time, management or the entity is also looking at the expertise of different firms in respect of different areas. Okay? So this sort of duplication should not arise. That's why you have division of responsibility, division of areas. Eventually, they will be issuing one audit report, but there has to be a division. Okay, so that's why in the planning meeting, they will sit together, they will understand what is their scope as far as the audit of financial statements is concerned, and they will be focusing in relation to their scope, except for some areas wherein each and every auditor believes, no, he needs to do something on that. Okay, yeah. So that's why it's all about sharing responsibility, but at the same time, a great level of coordination is also required in this case. Okay. Now, when it comes to the joint audit, as we discussed, it's very, very common in respect of PSUs, banks. Okay, so if you look at insurance, okay, therein you find this for auditors is commonly done. Now, when it comes to the joint audit, let's suppose joint audit is performed. So can you tell me who will issue the audit report? Will it be issued by all the 3 firms? Or will it be issued by only one who will be designated by them? So what is the requirement as regards the issuance of the audit report? Over to you. Tell me quickly. Quickly.
Sir, both will send the report, sir.
Yes. So it's all about one set of financial statements, yeah, which has to be jointly signed by all the firms. Now, in this case, one aspect which could be important is about the branches and the corporate office. See, when it comes to the branches and the corporate office, so what may happen is that some of the cases for the branches, auditor could be different. For the corporate office, auditor could be different. So that is not what we are calling as joint audit, because in that case, the responsibility of the branch auditor is only limited to the branch. Responsibility of the branch auditor will not flow to the corporate office or the head office. And that's why what will the branch auditor do? Branch auditor will issue his audit report on the audit of branch. That goes to the auditor of the head office. Now, auditor of the head office will have the responsibility to review, to evaluate any findings which are there, its impact assessment which is there in respect of the entity as a whole. Something which you call as central statutory audit in case of a bank. I think in case of bank we talked about. Yes or no? Yeah.
Yes, sir.
Clear?
They need to provide that materiality and also the asset and the cost, revenue, all this information to be provided.
Correct. But that sort of consideration is different. Okay, so I'm just trying to clarify that is more of a scenario wherein the component is there. For the component, there is a component auditor, and then you have this parent. For the parent, you have a parent audit. When it comes to a joint audit, we are saying that let's suppose for a branch there are 2 audits. Let's suppose for the parent there are 3 audits. Okay, so that is something which is more relevant in the context of joint audit. Clear? Okay. Now, next aspect. Audit considerations relating to an entity using a service organization. Now, what is a service organization? It's a third party organization that provides services to users that are part of those entities' information systems relevant to financial report. User entity is an entity that uses a service organization and whose financial statements are being. Who is a service auditor? Service auditor is an auditor who, at the request of the service organization, provides an assurance report on the controls of service organization. User auditor is an auditor who audits and reports on the financial statements of a user entity. Now, can you illustrate this concept of service organization, service auditor, user organization, user auditor? Tell me, can you give me an example for this?
Sir, say example, if A Limited is a
Yes.
company,
Yes.
in that Y is a auditor.
Okay.
A Limited is called the user entity, and Y auditor is a user auditor. See, when the A Limited giving
Yes.
their particular job to other person, say example,
Okay.
the payroll activity alone is given to XYZ, somebody
Right.
else.
Right.
That company is called service organization.
Right.
If the service organization audit is done by, say example, B is the auditor, then the
Right.
B is called the service organization auditor.
Right. Okay, so let's quickly try to understand this as to what is it that we are looking at. So I'll just quickly share one example. I think just to give you some more clarity. Of course, I know you're familiar with this. Okay, but just to get some more clarity around this. Let's suppose there's a company like we just mentioned, it's A Limited. Who is the auditor? Y is the auditor. Let me just call it as Y, and company is the auditor of A Limited. Now there is a process of A Limited. You can say some part of A Limited. Critical process or critical activity of A Limited. Say for example, accounting or payroll. Now this payroll process is not being handled by A Limited internally. It's not in-house. So what have they done? They've hired a third party. Let's suppose there's a third party, B Limited.
Outsourced.
Okay. Now B Limited is handling the payroll of A Limited. Something which you call as outsourced. Now in this case, let's try to understand about A Limited. When the financial statements of A Limited will be audited, will it have some aspect of payroll flowing into the financial statements? Answer is yes. In fact, it's not about some, it's a very significant component. as far as financial reporting is concerned? No. As regards the payroll, this payroll will have to be audited. Answer is again yes, this will have to be audited. Now, who will audit this? So we may say that again, buy-and company will have to audit this. Because without the audit, how will buy-and company get the comfort around the payroll which is forming part of financial statements of A Limited? He may not get the comfort. Yes or no? So that's why we need to understand that some part of A Limited, which is being managed by B Limited, needs to be audited, needs to be reviewed, needs to be verified. Now, if let's suppose B Limited will have strong systems, strong controls, so will it have some bearing on the activities it is handling? Of course, yes. See, if the systems of B will be strong, then of course there will be more comfort as around this payroll. Why? Because it's not there with A anymore, it's there with B. Correct? Yeah. So therefore, what may happen is there may be an auditor. Let's suppose that is P and company. Now this auditor is auditing B Limited, or let's suppose some processes of B Limited. Okay. Now in this case, idea is to check that in case A Limited, which is the user entity, engages B Limited, which is the service entity, then can the auditor of A Limited, means user auditor, or the auditor of user entity, place reliance on any sort of reports or draws comfort from any sort of reports of the auditor of service entity? Yeah, so that's the context. Understood? That's the context. Now, in this case, can you help me understand what is the requirement here? Over to you. What is the requirement? What do you do in this case as an auditor? Over to you. Quickly.
Sir, here the service provided by the servicing organization are relevant for the audit of the user entity when they are providing the financial reporting.
Okay. Now there are two types of reports, which are prepared, type 1, type 2. So let's quickly look at these two types of reports also. Description prepared by management of service organization system, control, related controls. It's a report by service auditor with objective of conveying reasonable assurance that includes service auditor's opinion on description of organization systems of service entity. Type 2 report is what? Again, the service auditor's opinion on the description of service organization system, control objectives, related controls, suitability of design of the controls to achieve specified control objectives and operating effectiveness. Plus a description of, now this is missing in case of type 1 report, description of service auditor's test of controls and the results thereof. Okay. Now, as an auditor of the user entity, can you tell me what do you need? You'll need type 1 or type 2 report?
Sir, we need to obtain type 1 or type 2 report if available.
Yes, if available. What if these are not available?
then we need to conduct that service organization to obtain the specific information, whatever we needed.
Correct. So as an auditor, we'll have to apply our procedures. Okay. So if we can just leverage some part by looking at type 1, type 2, it's good. Otherwise, we'll just go on and perform the procedures as an auditor in respect of that service entity. Okay. Yeah. Now, if let's suppose these reports are available, we need to evaluate that in terms of their adequacy, in terms of their appropriateness. So just because the reports have been obtained, can we say that it's all done and dusted? The answer is no. We need to look at that. Yeah. We need to look at that. We need to evaluate that. And we need to also understand if this is going to have any impact on the financial statements. Okay. Now, if there is any reporting implication which arises because of any of these considerations, who will be doing that? It will be done by the auditor of the user entity, because currently we are talking about audit of the user entity. Clear? Everyone clear on this? Any questions, any doubts so far?
So you said that standard SA 260 is there is a lot of discussion about the change or
Not the change.
considering its
It's-
effectiveness.
Okay, so let me just clarify. It's about its application.
Yes. So that aspect was not, we did not discuss like what are the proposed areas or.
See, there are no specified proposed areas. It's about this entire auditing standard. It's about the application of this auditing standard, which has been under discussion. And please understand, I'm not saying any change is coming up. I think somewhere you may be misinterpreting this requirement. Auditing standard is not going to change. There is nothing which is newly proposed. This standard in itself, the objective which it has, what does it require? It requires the auditor to communicate with the TCWG. So the point is that really taking place on the ground? Theoretically, the auditing standard is there, but is it really getting applied in a practical manner? Answer is no. So that is what the regulators are focusing on. The regulators are saying that the auditor should do this quite a lot. The regulators are saying audit committee should also be doing this quite a lot. Okay. And again, it's not limited to any specific area which is prescribed in that auditing standard. It's all about everything which is there in the auditing standard. Yeah. So its application is what the regulator wants. So they are saying for this financial reporting to improve, for this process of audit to improve, it's important that these two parties come together, meet often, meet for they understand the requirements, they understand the challenges, okay, so that this entire process can achieve the desired objectives.
It does not remain a letter, it gets implemented in spirit itself.
Exactly. That's the point. Okay.
Yes, sir.
All right. Any more questions? Any more doubts? Then I think we'll move on to questions also. No? Yeah, everyone clear? All right. So now what we can do is I think we can take a break now. And after the break, we'll just move on to the questions to practice this. Fine. Okay. So let's take a break. Ashok, yeah, let's take a break now. Okay. So I'll just share the document. My Decor Limited, presently engaged in manufacturing of fabrics, wants to set up a new plant for manufacturing of special kind of fabric, providing an altogether different texture and feel. Okay. So they are looking at setting up a plant. This kind of fabric has become a hit with retail customers. The company needs to set up plant for manufacturing the above kind of fabric, involving huge capital outlays to stay competitive in the market. You are the auditor of the company, My Decor Limited, and finds that company's revenue has increased in financial year 23-24 to 1,000 crore, which was 750 crore in 22-23. Okay. By the time you started the audit, there was no change in plant capacity, and information regarding the need to set up the new plant, this has become known to you during the inquiry, okay, which you have performed as an auditor. Discuss how you should proceed to deal with the above situation. As the auditor of the company, paying special attention to, now this part is important, paying special attention to risk of material misstatement due to fraudulent financial reporting. So I'm just hoping that you are clear on fraudulent financial reporting. Now, in light of that, tell me, what are going to be your considerations as an auditor? Over to you.
Yes, sir. So we will, as an auditor, check that the financial statements prepared by the management are
Yes.
disclosing the correct and financial, correct and true position of the profits and revenue, because revenue is an important area, and there is
Okay.
a substantial increase in the financial profits of the company from 750 crores to 1,000 crores.
Turnover of
And
the company.
turnover of the company. So
Okay.
revenue, it is saying revenue.
Correct. So that's turnover only.
Okay.
Right. What else?
And
So this is one.
and further, sir, there is no change in the plant capacity, and the
Right.
management is able to increase the profits,
Right.
turnover. And
Right.
further, we have come to know that there is management has there is a need to management is planning to set up a new plant,
Right.
and we will verify whether the profit this increase is not due to management trying to window dress the balance sheet to
Okay.
set up the need for need for manufacture this plant, to set up the need for the plant, and whether
Okay.
there is actual need. And also we will assess whether the management is overriding the controls.
So how do you check that?
We'll check up the internal control systems which
Okay.
are in place, and along with the verification of the various places where the management can override those controls, where the management can
Okay. Good. All right. Anyone else? Any more thoughts if you have? Something
Sir,
that you'd like to add to this? Yes.
Sir, in this case, obviously, without the increase in the capital outlay, the
Right.
company is suddenly increased from 750 crore to 1,000 crore.
Right.
There is a consideration for fraud risk factor
Right.
on the risk of material misstatement.
Yes.
So, see, whenever there is a risk of material misstatement, the auditor should procedure will be we need to the testing the control
Okay.
pertaining to the revenue transaction. Each
Right.
revenue transaction, what is the control behind, whether the delegation of authority and it is properly approved, all the recorded, any false entry, all these things we need to check on the testing control.
Right.
Also, we need to identify, is there any unusual revenue transaction? Say example, whether the cash is received for such sales
Okay.
pertaining to that. That also then we can definitely substantive analytical procedures relating
Right.
to revenue need to be performed.
Okay. All right. Anyone else? Any more thoughts if you have on this?
Sir, here a company needs to set up plant and then required to raise fund.
Right.
So company may increase their revenue so that
Yes, please go ahead.
it's more effective to raise the fund and we can check the sir here.
See, your voice has gone down. I think.
Okay. Sir, auditor can check through the average plant ratio to output through the industries, sir.
So you're
Manual.
saying some sort of industry assessment can be done, is it?
Yes, yes, yes.
That
Yes,
analysis
sir.
of the industry can be done. Okay.
Yes.
So that's a good point, valid point. What else? All right. So now let's look at this. See, there is a very specific requirement in this case. Now, what is that? That company needs to set up a plant, okay, which will require huge capital outlays to stay competitive in the market. Yes or no? So at one place, what do we understand? That for the company to stay competitive, now what is the meaning around it? If the company has to sell, then they need to have a plant. Now, was that done by the company during the year? Did the company inform about this understanding that the company needs to set up a plant, okay, or the company needs to enhance the capacity to the auditor? On its own, no. Of course, when the auditor inquired about the process, about the understanding, he got to know. But there is something which seems to be not in line with this requirement. And what is that? That the turnover has increased significantly. Yeah. So there's a sharp rise. Now, what is the rise? From 750 crore, turnover has gone to 1000 crore. Is it possible? Answer is no. At one place, we are saying that for the company to stay competitive, it will need an expansion. Then at the other place, what do you find? That company has been increasing its sales significantly during the year. So these three things do not gel. They do not go in line. Yes or no? Yes or no? So somewhere there is a problem which is clearly evident from the fact pattern. And that is where I think, even though the question has itself answered this, see, the good part about the question is that the question has itself answered this, that there is a risk of fraudulent financial reporting. Ideally, this should have been a question. That what is the risk in the given situation? So you should have said that in the given situation, there is a risk. What is the risk? That the financial reporting could be fraudulent. Okay, so can you now understand? The question itself is helping you. Now the only thing that you need to comment upon will be what? Your considerations. Setting up of such plant involves huge outlays, which could entail financing arrangements. Therefore, excessive pressure exists for the management to be involved in fraudulent financial reporting. In such a situation, management may be tempted to inflate its revenue. It's a fraud risk factor. Correct? Now, in this case, what are going to be the audit procedures? If there is a fraud risk factor, there is a risk of fraud, auditor has identified. Now, what can he do? He needs to focus upon this. He needs to focus upon this increase. The reasons for the increase. What is it that the management has done to achieve this significant increase in the revenue? So the first procedure will of course be what? Analytical procedures, which will give first insights to the auditor as to why the revenue has gone up. Yes or no? Why the revenue has gone up. And along with the analytical procedures, auditor needs to substantiate that. See, only the inquiries, only the discussions with the management will not be good enough because it's about fraud. So that's why auditor needs to substantiate that. So how will that be substantiated? By looking at the supporting documents. Okay. So when the auditor inquires, management explains that maybe new contracts have entered during the year. So he can look at some of the samples. If the auditor inquires, management says, no, the volume has remained intact, but the prices have gone up. So he can always look at the invoices. He can always look at the price list to find out as to whether the revenue has really gone up or not because of the increase in the volume or because of the increase in the amount, which is due to the prices. Correct? Yeah. At the same time, when it comes to the fraud, okay, one of the very important consideration will be what? Controls. And controls in relation to the revenue process. So this will be a very important consideration. Controls in relation to revenue process. So these controls are required to be reviewed. So auditor will obtain an understanding what all risks management had identified, what all controls were in place, and whether those controls are operating in an effective manner or not. How do you do that? Testing of controls. Yeah. And after that, of course, substantive testing will also be done. So that will also be done. Clear? Clear? Everyone clear on this? See, I think to a certain extent, this question was already answered for you. Yes or no? Next, CA Ridhima, who is the internal auditor of Dragstore Limited, has pointed out following deficiencies in internal control. Now, what are the deficiencies? Receivables are not reconciled at stipulated intervals. Customers are provided credit limit based upon their track record. However, no review of customer credit limits is undertaken at required intervals. So you can say once again a review of their credit limit has not been done. So these are the two deficiencies which have been highlighted. Now statutory auditor, he finds that no action has been taken by the company on the deficiencies. So if you understand the internal audit process, every time the internal auditor will give the report, so he'll not only be coming up with the observations, there must be an action plan for it. In fact, in the internal audit report itself, the action plan is laid out. Means who will be taking the action or the corrective action, is the person responsible. What will be the timeline within which such action is required to be taken? And then a follow-up is done. Let's suppose 15 days are set. Mr. Y will take care of this. Within the next 15 days, he'll just fix the system. Then after 15 days, a follow-up is required to be. Okay. Through that follow-up, you'll get to know whether the deficiency has got removed or not. At least the systems or the processes are concerned. But in this case, statutory auditor found that no such action has been taken by the company on the deficiencies which have been pointed out. Okay, on both. Now, what does this above situation indicate to you as the statutory auditors of the company? Over to you. Means, due to this situation that you come across, the point is, what are going to be your considerations? Let's suppose if you are the auditor, what are going to be your considerations in the given situation? Over to you.
Sir, in this question, it is a very, very clear indication that the management intention to make a fraud. See,
Okay.
as far as the internal auditor is concerned, they can do the follow-up, action taken report they can put in place, they can do the continuous follow-up to rectify the mistake.
Right.
But even though the internal auditor has done the continuous follow-up with the client, they are not ready to rectify the mistake.
Okay.
So we feel that the fraud risk factor is exit on this.
Okay.
There is a we could see that definitely there would be a fraud potential will be there on this case, we believe.
Okay. So
And
you're saying,
yeah, and also
you're saying there seems to be a situation that the management is involved in some sort of fraud in this company, is it?
exactly, because the receivable are not reconciled as a supplemented time. See,
Yes.
what is the sales, whether the money is received or not, the confirmation with the debtors was received or not.
Right.
And also the customer, when you are credit limit, when they are
Yes.
fixing it, they are also failed to do that. The credit limit, whether undertaken at required interval or not.
Okay.
See, whenever we are giving that the customer on the credit limit, say
Yes.
example, the 1 crore is the credit limit. Without,
Yes.
we need to get whether the security available for that, what is the creditability of the customer when you are providing sale to them, whether the possibility of receipt of money is there. See, they are
Yes.
not at all bothering about this information by the management.
Right.
See, it's a clear indication that the management is intention to make fraud. There are not all basic ethic is not at all there. Their attitude also is not fit for this.
Okay.
This is what my conclusion that it's
No, that's good.
Yeah.
Yeah, so that's a good thought. Yes. Who else will like to add to this?
Sir, here internal control is weak and management is not intended to improve the internal control, and this provides the opportunity to commit the fraud.
Right. Anything else?
We will inquire with the management that there is a report and these deficiencies have been pointed out. So whether management plans to take some corrective action or whether these are being implemented.
Okay.
At the first level, at
Right.
the initial.
Okay. See, the given situation talks about couple of deficiencies. Now, to have deficiencies reported by the internal auditor, that is quite common. Okay, so as far as any entity is concerned, so if there's a deficiency in the internal audit report, can we say it's a very big problem? Of course, it's a problem. No doubt, deficiency should not be there, but it's not a big problem. Then it comes to the areas that, okay, yeah, what are the areas over which the deficiencies have been observed? Now, these are the areas which appear to be in relation to revenue and the collection. Yeah, so there's a cycle which is called as revenue to collect. So somewhere in that cycle, these deficiencies are found. Now, what is the first deficiencies? Receivables are not reconciled. Now, if the receivables are not reconciled, what may happen is you collect the money from the parties, but you do not have a track of it. So will that be a concern? Answer is yes.
Not accounted. Maybe that money is credited to some personal account instead of company account.
Correct. So there may be another risk which is attached to this. So let's suppose there are 3 customers, A, B, C. Let's suppose D is also there. So what could be the reason why this reconciliation has been intentionally ignored? Maybe from A, money is not getting collected. Maybe from B, money is getting collected, but that has been fraudulently, let's suppose, taken out of the system of the company. So there is some sort of fraud in terms of collection from B. Now, will the company get to know about it? Answer is yes. The moment you reconcile, you close the balance of the party. So the company will know. But what if you keep the debtor balance outstanding? Nobody will get to know whether the money has been received or not. Okay, and the money which you have received from this debtor, maybe this has been taken out of the company. Correct? Yeah, so that sort of risk is there. And what do you call this risk as? Fraud risk. Okay, so we discussed 2 types of risks are there. One, there is a debtor who is making the payment, but still it's appearing as outstanding, which is a control risk, okay, which is a problem, unless you keep tracking that debtor. Second, there's a debtor who has made the payment, but you want to keep it outstanding so that nobody gets to know the money has been received and that has been taken out of the company. Further, there is the second deficiency, which seems to be quite linked to first sort of deficiency. That to the customers, a credit limit is provided. Okay, let's suppose outstanding of B is shown. So ideally, what should happen? You should stop making sales to B. If you stop making sales to B and B would have made the payment, so what will happen? B will jump. B will start talking to the management that why you are not making sales. So this will create a noise in the system. Everybody will get to know about it. So the best way is that you keep giving credit. So if B will keep receiving the sales, B doesn't know as to how this company has been accounting for its ledger. Yes or no? Yeah? Okay.
Yes,
so
sir.
now this seems to be a problem which is linked to the first one. So in a way, we can say both of these appear to be interlinked to each other. If the fraud risk factor has to be considered, I'm not saying fraud is there. If you consider the fraud risk factor, then this could be a risk. Now, as an auditor, what do? you have to at least consider this as a risk and ensure that you perform your procedures to take care of this risk. Correct? Yeah.
Yes, sir.
So the management failing to remedy known significant deficiencies is a fraud risk factor. When the management doesn't correct significant deficiencies, it reflects an attitude, character, set of ethical values. Okay. Lack of timely reconciliation may lead to intentional misstatements, like we just discussed. Further, non-reviewing the limit may lead to grant of credit beyond the credit worthiness. Okay. It may result in intentional tying up of companies' funds with risky customers due to pollution. Okay. So in this case, auditor needs to consider this as a fraud risk factor and design the audit procedures. Now, if you look at the first question, okay, as I told you, generally, you sort of get some comfort in the exam. See, if you get question number 1 in your exam, in this question, actually, some part of the solution is already given to you. Why do I say that? Because, see, the most important part in the question will be what? That what is the kind of risk? But that is more of judgmental. Yeah, that is more of technical assessment, which you do as an auditor. But if you understand the risk is there, then of course you can think about 20 audit procedures. Yes or no? Tell me. Tell me yes or no. To think about audit procedures is easy.
Yes, sir.
To identify the risk is something which is not so easy.
Yes, sir.
Now, if you go to question number 2, in the question number 2, that risk identification is what you are required. Correct? Yeah? Clear? So in
Yes,
the
sir.
exam, you may come across any type of situation. Huh? Okay, now let's look at the next one. FAS Insurance Brokers Limited, it's a leading online insurance intermediary. Online insurance intermediary means they provide the portal and wherein you go take the insurance of different companies. Okay, so that's the nature of business that they have. During the year, Director General of GST Intelligence, DGGI, has issued notice to the company for allegedly creating fictitious invoices for marketing and sales services amounting to 50 crore in favor of non-life insurance companies. So it appears company has recognized sales. Okay. And those are fictitious in nature. Amount is quite significant. So if you look at the amount, it's quite significant. It's 50 crore. Now, premises of the company were also searched during the year by the officials. So they have physically verified the premises of the company. Matter was also informed to ILDA by DGGI for violation of norms and regulations. So it appears one regulator has reached out to the other regulator that there is this non-compliance. Okay, so I think looking at the fact pattern, it's confirmed that company has actually done this. So it's not a risk, company has actually done this. Correct? Does the above situation has any bearing on your responsibilities as statutory auditor of the company? Outline briefly in the context of possible non-compliance with laws by the company. Over to you. Yes, over to you. Your thoughts on this.
So there is the company has clear cut violated the laws, and
Okay.
also apparently the management did not inform the auditor about these notices regarding the creation of fictitious invoices.
So how do you know the management didn't inform? So you can't add any fact pattern. You can always draw assumptions. See, please remember, in the question, if you want to draw assumptions, you can draw assumptions. Provided there is some gray area, there's no clarity. So you can say, I'll have to draw assumptions. But you can't add your own facts. Because if you add your own facts, then of course the question may change. And you may end up answering wrong. Okay. So nowhere in the question it is specified that management has not disclosed about this notice to the auditor.
Sir, having said that on the question, actually the investigation by the department,
Right.
that DGGI for violation of
Yes.
norms, it is an indication of non-compliance with respect to laws and regulation.
Okay.
But it's an indicative factor. But
Right.
based on that the indication itself, the auditor will not come the conclusion that there is a fraud or something.
Okay.
The thing is that it is a suspected, but
Right.
if it is a real case, then the financial effect will be more on the financial statement
Right.
because the amount involvement is high. However,
Right.
as an auditor, what he has to do, he has to be understand what is the nature and which circumstances this situation is happened.
Okay.
And also he is going to scrutinize is there any substantive audit procedure to be conducted on this case,
Right.
to check any possible effect of the financial misstatement.
Right.
That only the concern for auditors, sir, I believe.
Okay. What else?
So there is a question mark on the integrity of the management also.
Very good. Yes.
And the auditor will consider whether, having come to the know of this fact, whether he would
Right.
like to continue with the audit or not. And he will, before continuing or discontinuing, he will take appropriate legal advice regarding the matter, whether he
Okay.
can continue and whether he should withdraw from the engagement.
Right.
Sir, and
Further,
sir, and also in this case, we need to get the written representation with respect to this matter with the those charged with governance.
Yes. What else?
and so creating fictitious invoice is a fraud risk factor. It relates to revenue, and there is a notice regarding this that that the company has allegedly created fictitious invoice.
Right.
And amount is 50 crores in favor
Right.
of non-life insurance companies.
Yes.
And the premises were also searched. So there is a prima facie presumption regarding that the company is involved in these sort of activities. It is a rebuttable presumption, but prima facie there has to be some evidence with the authorities that they have issued notices also, and also the premises were searched, and the matter has also been informed to the IRDAI.
Right.
And also, since this matter pertains to an insurance company and the matter has been informed to the IRDAI, it is a very it has a direct bearing on the operation of the company itself, because the license is granted by the IRDAI to the company.
Yes.
And this may also have a bearing on that aspect, whether the license can be revoked or not.
Correct. Correct. So to a certain extent, you need to evaluate as to the repercussions of such an act by the company. Correct?
Yeah, on the going concern also, on the going concern assumption also, it may have an impact on.
But why do you want to get onto this assessment of going concern here? Any specific reason you want to touch upon going concern?
See, I think he felt that if the license is not granted, then the
Okay, you're
going
saying
concern
what
will
if
get
the
affected.
company is not allowed to continue?
Yes, sir.
Okay. Yeah. So that can also be a thought process. Okay. See, now the given situation, if you look at, so clearly there is a fraud. Yeah. As far as the audit is concerned. Now, as regards this matter, what the officials have done, whether it is GST or AAA, that's a separate consideration. Okay. That's a separate course of action which they need to follow. Important point is that in respect of this fraud, which has taken place, what is it that the company needs to do? Yes or no? Yeah, because it's a serious offense. It's a serious offense. And because it's all about revenue recognition, so there's no doubt the financial statements seem to be misstated. And there is a material misstatement in the financial. 50 crore anyways will not be a small number. So that's the understanding that we will go with. Okay. Now, if the auditor becomes aware of such an instance, then what does he need to do? Of course, he'll obtain the details. He'll also try to assess the impact. Now, what is going to be the impact assessment? One, we'll try to check that because of this, what is the penalty as far as company is concerned? What is the financial impact? See, on the financial reporting, he understands the revenue to the extent of 50 crore is wrong. So at least that impact is known to the auditor. So at least that part of the reporting implication in the audit report is concerned, he will always be looking at. But beyond that, if let's suppose there will be any penalty on the company, if there is, let's suppose, any interest that will be charged, okay, which will enhance the amount of that financial impact. So that also needs to be evaluated, because accordingly he'll have to just report that in the financial statements. Further, as I think you rightly mentioned, there's a non-compliance of applicable laws. See, insurance company is a highly regulated business. So no, it's a very highly regulated. In fact, some of these companies are the public interest entities. Do you understand public interest entities? So these are the one wherein the public is interested. Okay, public interest is involved at large. So that's why there's a huge focus of the regulators in respect of such companies. Yeah. So the auditor needs to understand this matter in detail. Auditor may have to engage his own experts, his own legal experts to evaluate this matter. Auditor will also be having discussions with the legal experts of the company who may have some thoughts as around this matter. At the same time, considering the fact there is a fraud, integrity of the management is also a big question mark. So if the auditor is having discussions, he needs to keep that in mind, that the management with whom auditor has been interacting, okay, they had this fraudulent thought. So to a certain extent, he will be able to rely on the discussions that he is going to have with them. So that's why he'll have to substantiate any of the discussions that he's going to have with the management. Okay. In this case, the communication of the auditor with TCWG will come into the picture. This is a matter which he needs to understand. Again, sitting with TCWG, he needs to communicate about it. Of course, TCWG will also be knowing about it, but that's how this discussion has to happen. Okay. And its reporting implications. Whether it's something which is required to be reported anywhere in the main report, CARO, any of the regulator, all of these aspects will also be required to be evaluated by the auditor. Okay, yeah. So of course, in this case, you may have a thought that what if this is not a fraud? What if this is only a consideration by the authorities? See, given the fact pattern, it doesn't appear as if it's a doubt whether it's a fraud or not. I think question is quite clear. It's clearly evident from the question that the fraud has taken place. Okay, clear on this? Next, CA Vallabh Sundar is auditor of leading private sector bank. So we are talking about a bank, right? IT systems and controls. In a bank, if you remember, we discussed IT systems, IT controls. That's the core. Okay, that's the basis. For a bank to operate, for a bank to survive, yeah, with the volume, with the kind of complexity that they have, what do they need? IT systems and controls. Now, this is under the consideration of the auditor to be reported as CAM in the audit report of the bank due to high level of automation and complexity of IT architecture, and also its impact on the financial reporting system. Now, in this case, the consideration is around CAM. Now, please remember, it's a consideration around CAM. Do you understand CAM? What is a CAM? Over to you quickly.
CAM is the key auditor matters.
Okay, what is a CAM? That's the full form. What is a CAM?
Which is fundamental to understand the impact of the certain transactions, sir.
So how is it different from emphasis of matter then? Okay, so we'll talk about CAM also. Now the question is, at what time auditor should communicate such identified CAMs? In the given question, matter has already been identified as CAM. So the question is not about whether this will become a CAM or not. Question is what time auditor should communicate such identified. So it's about communication. And what are the relevant considerations in this regard and their usefulness? Now, I think somewhere we require a discussion on the CAM. Now, let me just help you understand CAM. What is a CAM? Of course, the full form is key audit matter, as you have rightly mentioned. See, when it comes to the audit, the only deliverable which goes from the auditor is audit report. Yes or no? Yeah. So the only deliverable that the auditor is going to have is what? Audit report. During the course of audit, whether the audit is going on for 15 days or maybe 10 months, does the stakeholder get to know as to what are the challenges auditor is facing? Answer is no. Auditor will apply hundreds of procedures during the course of his audit. Auditor will also be applying his judgment. He'll use his experience. Yeah, there will be a lot of deliberations of the auditor with the management. There must be some deficiencies he will go through. He'll have communications with TCWG. All of these things which the auditor will do. Do the stakeholders get to know about it? Tell me. Tell me, what do you think? Do the stakeholders get to know about it?
No, sir. Unless otherwise communicate, they will not aware about this.
Yeah, so, and unless and otherwise it is not communicated anyways. Correct? That is why there was a concern. Okay, so before CAM, there was a concern amongst the stakeholders that there is a set of financial statements that we rely upon. So if let's suppose you are the stakeholder, you are given a set of financial statement and then another set of financial statement which is audited. So one is audited, another one is unaudited. Which one do you rely more on?
Definitely audited one we will rely more.
Definitely audited. So the stakeholders were concerned, they were bothered that there is a set of audited financial statements that we rely on, that we wait for. So the users wait for the audit report. And in return, what do we get? A standardized template. Audit report is what? A standardized template only? Yes or no? So you may be thinking, but sir, there will be an audit opinion and there will be a modification wherever required, which is true. But if you look at the entire audit report, whether that is modified or clean, it's a standardized document.
Yes, sir.
Can you change the language in any of the sections? Answer is no. Can you change the section? Answer is no. Can you change the ordering of the audit report? Answer is no. Do you ever get to know as to what has gone behind the audit, which may be running for months in case of large size companies? Answer is no. That is where a need was felt. What was the need? That this audit report should be interactive in nature. It should not be dull, so boring. Yeah, so like for example, you think audit is boring. Yes or no? Yeah. So it should not be so dull, it should not be so boring. So idea is it should be made interactive. So how do you make that interactive? That is where this CAM got into the picture. So the idea was that during the course of audit, any of the challenges which the auditor faces, which are quite important, which are quite significant, any of the matters which come across, which are again quite significant as far as the understanding of the auditor is concerned, that should now be brought to the notice of stakeholders. So does it mean that we are now trying to highlight the deficiencies of the company? The answer is no. So we are not at all talking about the deficiencies or the findings. We are only talking about those areas which were quite important or which were quite challenging or which involved significant time on the part of the auditor. Okay, so that's the whole thought process of CAM. So that is what CAM communicates to the stakeholders.
Okay, sir. The CAM is nothing but based on this professional judgment. Judgment means based on the experience and the knowledge. He identified most of the significant matters during the audit, so that he only aware about this. Unless otherwise he communicate to those chargement, they were never aware about those things.
Correct.
Right,
And
sir.
when he is trying to communicate,
Yes.
does it mean that he is trying to communicate any sort of deficiency or the observation? Answer is no. That's where when you look at CAM, in the CAM section, it is always clarified that our opinion is not modified. We are not issuing any separate opinion in respect of these matters. So you should not be assuming that all of these matters which are getting reported are any sort of negative reporting. No, this is not a negative reporting. Idea is just to interact with the stakeholders through this section. Okay, idea was to make that boring report some sort of interest to the stakeholders. Okay. Now, during the course of this audit, now similar thing is required to be done by CA Vallabh. So what did he do? He identified that it's a bank, IT systems controls, okay, which he had to go through. He found that it's a CAM. Okay, review of IT systems, review of IT controls is a matter of CAM for for this particular auditor. So that's his assessment. Now, please remember, CAM is always judgmental. Judgmental means that for each and every auditor, it may have a different thought. Yeah.
Yes, sir. Based on that particular auditor experience and knowledge, he will come
Yes.
to the professional judgment based on
Correct.
his understanding.
Correct.
It will differ from the other person always.
Correct. Correct. It may differ.
It may differ.
Now the point is that what time should this CAM be communicated? To whom this should be communicated? What are the considerations around it? Now, see, when it comes to any such important matter, there is no doubt this communication has to be done to the management and then, of course, TCWG. Yes or no? TCWG should get to know about it. Yeah. Further, if you look at the relevant auditing standard on CAM, that standard gives you the insight. I think the insights that we just talked about. Okay, as to how do you assess that? What are the ways you look into it? How do you identify a CAM? What are the considerations behind a CAM? And we also discussed as to why it is useful. What is really the relevance of this? Understood? Yeah. Next. 4 audit firms, GPR, MKS, CY, DS. They have been appointed for conducting statutory audit of KNB Bank. KNB Bank is a public sector bank. Professional work was divided amongst the audit firms on the basis of zones of the bank. I think it must be North Zone, East Zone, West Zone, South Zone. Okay. However, work relating to IT systems and controls was not allocated by them due to its very nature. While planning for the above common work area, it was decided to test IT general controls, application controls, IT dependent manual controls. Planned key audit procedures relating to this common area also included testing design, testing the operating effectiveness of controls over computer operations, including backup, batch processing, and data center security. Okay. Actual audit procedures pertaining to testing controls over batch processing were performed by the team of DES, means only one audit. In case work in relation to above procedures is not performed professionally by DES, discuss where responsibility for such lapses would lie in line with the auditing standard 299 on joint audit. Over to you, your thoughts. Yes, quickly, your thoughts. Over to you.
Yeah, 1 minute, show the question again, sir.
Okay, just a minute. Okay.
Next page also.
Next page.
Yes.
Okay.
Okay. Okay, sir, got it. Sir, whenever there is a joint audit happens, they will design and nature, timing, and the extent of the audit work to be shared,
Right.
which will be planned on the initial stage itself. See, this say
Okay.
example, if one auditor has to be vouched at the income and expenditure. Another auditor looking at the asset and liabilities. The division of work will be done at the initial stage itself. Say example, if the company having the 4 or 5 division of his operation, say
Yes.
2 division will be taken care of by one auditors, and another 3 division will be another 2 will be one auditor, and one division will be jointly they will do it also sometime.
Okay.
Whenever they are jointly doing the audit, it is a common area. Both are responsible.
Right.
Whenever it is assigned to the particular joint auditor, only those area is responsible by them.
Okay.
But in this given case, actually, I think the testing, designing, operation, all this control, including that backup, control, application, manual, all these things, they put in the common area jointly.
Right.
However, the testing control, say after implementation,
Yes.
is specifically done by that DES associate, as mentioned in the question.
Yes.
So in those areas, they are only responsible.
Okay. So you're saying only DES is going to be responsible for this? Huh?
Yeah, DES
it will not
is
fall on the other auditors, is it?
Other auditors will not fall, because as far as the testing control is concerned, the audit process relating to testing control is concerned, it's actually performed by DES associate. So only that auditor is alone responsible for that audit.
Okay.
Yeah, this is what my conclusion is. That. Thank you.
Okay. Anyone else who would like to add to this? Anyone else?
So this was the area which was planned to be a common area.
Right.
And included testing designs and operating effectiveness of controls.
Right.
At the initial stage, this was planned by them.
Right.
So even though the actual work is performed by one of the auditor,
Right.
the responsibility will be borne by all the auditors.
Okay. So in this case, your thought is that this will fall on all the auditors, correct?
Correct.
Okay. So now, see, in respect of common areas, joint auditors are only responsible for appropriateness of nature, timing, extent of planned audit procedures agreed among. The responsibility of individual execution lies with the concerned joint. In the instant case, audit procedures related to testing design, operating effectiveness of controls in relation to some of these areas, they were planned jointly. Correct? However, audit procedures related to this testing control over batch processing were actually performed by DES, although they were planned jointly. In case of any lapses, who will be responsible? DES will be responsible. Okay. Why? Because the responsibility of individual execution lies with the concerned joint audit. Okay. Next. A, B, and C are the joint auditors. B is of the opinion there are material misstatements in the financial statements, which, if accounted for, would turn the profit reflected in financial statements for 25 crore to a loss of 5 crore. So he is saying that the material misstatement is there and the profits are overstated by 20 crores. Yes or no? He therefore wants an adverse opinion. Adverse opinion, he believes the impact is pervasive. So that must be the thought. That's why he's thinking adverse opinion. However, A and B do not concur with his views. They have a different thought process. Is B required to go by the majority opinion? Auditor is of the opinion financial statements are materially misstated and the misstatement is also pervasive. So they have extreme opinions. Huh? Please remember the opinions are also on the extreme side. So now in this case, what should B do? Over to you. What should B do? Tell me quickly. Your voice is very low.
Yes, sir. His voice is very low, sir.
Yes. I think if you can
Sir,
just. Yeah, it's better now. Very good.
auditor is not bound by majority of the rules, sir. Every auditor can give their own report according to their judgment, sir.
So in this case, what should B do? Because A and C have a different opinion.
B should give us separate report, sir.
Okay, B should give a separate report. So you mean to say there will be two reports, is it?
Yes, sir.
Okay. Anyone else?
Same. Okay. Actually, the majority opinion not required in this case of the B. You should not mention the majority required. The reason
Right.
is that the separate audit report, a joint audit is not. It's a view the majority of the joint auditor where the opinion is covered. The thing is that they can always report on this situation. They're referring to the other audit report with respect to other matter paragraph. Yeah.
Okay. Anyone else? All right. So let's look at this. Where the joint auditors are in disagreement, they shall express their opinion in a separate audit report. A joint auditor is not bound by, of course, the views of majority. Therefore, in the given case, B is not bound by opinion of A and C. In this case, what should be done? Audit report issued by joint auditors shall make a reference to the separate audit report issued by the other joint auditor. Further, separate audit report shall also make a reference to the audit report issued by joint auditors. So let's suppose B has given one audit report, A and C has given one audit. Okay, somewhere the stakeholders should get to know. So how do you get to know? When there will be a reference. Okay, so it should not happen that stakeholder is only looking at the report of B or only A and C. Okay, so that's how it should be done. Such reference shall be made under the heading other matter paragraph. Okay. Next, CA Shelly Goyal is offered appointment as auditor of Root Limited. So it's a listed company. Now, please remember, in case of a listed company, there are different considerations. Audit committee of this company wants her to justify independence in relation to the company through proper communication. Although she has ensured there are no threats to her independence, she feels the requirement of audit committee to be beyond its purview. What is your opinion? So do you think that audit committee, whatever they've asked for, is this appropriate on their part? Or do you go with the view of C.A. Shelley that what audit committee has been asking for is not appropriate? Over to you. I think this is more of a requirement, or this is more of a matter which auditor needs to, of course, communicate with audit committee. So from that perspective, you can always find out from the requirements of that auditing standard. Further, even if you look at the Companies Act, so Companies Act also talks about the requirements in relation to the audit committee. Okay, so I think both the perspectives you can consider here. Over to you. Yes, tell me quickly. Your thoughts. Quickly, huh?
Yeah, definitely, sir. The engagement team should comply with the relevant ethical requirement regarding the independence.
Right.
All the relationship and other matter to be the, say, example, the auditor professional judgment. They need to ensure that definitely to be kept in mind on the independence.
Correct. So I think if you look at this particular scenario, okay, this scenario is also only talking about the independence. See, the independence of the auditor has to be a first and the foremost requirement to begin the audit. And this is something which the auditor is also expected to communicate to the TCWG. Yeah.
Yes, sir.
Now, in that respect, what is it that the auditor will communicate? That auditor is independent, his firm is independent, and they are meeting the relevant requirements of the code of ethics which apply to that particular engagement. Okay, all sort of communications are important, and those communications can only be done when the auditor would have done that assessment. So if the audit committee is asking for such communication, is that in line with the requirements? Of course, yes. As per the Companies Act, audit committee is required to review, monitor independence of the audit. Okay. So therefore, to say that audit committee cannot ask for this information, first of all, that is not in line with the requirements of auditing standard. That is also not in line with the requirement of Companies Act. So somewhere auditor needs to understand that this is the prime responsibility of the audit committee to get it done. And who will do this for audit committee? Of course, the auditor, because the auditor has to prove his independence. Auditor will have to communicate his independence. So if the audit committee is asking for that information or the communication, that is something which the auditor will have to provide. Clear?
Yes, sir. Independent is a key matter during the audit.
Yes, that's the first and foremost requirement.
Fundamental, yeah, it's a fundamental principle.
Correct. Very important.
Very important point. Yeah.
Yes. Next. CA Anand is engagement partner for audit of NHT, which is into manufacturing. Company has its plants in the state of Sikkim. While verifying the wages record, CA Anand found maximum of labor employed in plants of the company was child labor. He questioned the management about the same, to which management replied, they are looking into the compliance of such law. Okay, but as far as the auditor is concerned, they said that this is outside your scope, because your scope is limited to the audit of financial statements. So what is your thought? Tell me, what is your thought?
Sir, this is a labor law question. This is every company should follow the laws and regulation to with respect to labor.
Correct.
Here the child labor is involved. So auditor is responsible for obtaining the reasonable assurance.
Correct.
Is free from material misstatement.
Correct.
Whether it's caused fraud, error or not.
Correct. So in the given case, if you look at some of the legal requirements, okay, now, is that a law which will apply on the company? Answer is yes. And will that have some financial implication on the company? That can always have.
Yes, sir.
Because if the company is not complying with any law or regulation, that can always have some financial repercussions.
Yes, sir. Definitely,
So,
the penalty will be levied by the
penalty could be levied.
Yeah, penalty.
And yes, any sort of other impact could also be there. So
Yes,
that's
sir.
why it is important on the part of the auditor to get this into his consideration. Okay, and if the impact is very severe, he may also think about reporting implications for the same in his audit. But that again will have to be looked at on a case-to-case basis. All right.
All right, sir.
All right. So I think we are through with this. And any questions, any doubts, we can discuss that now before we pass it on to Tanya ma'am. Yes. Any questions, any doubts? Everyone clear? Sure. All right. So then thanks everyone for your time again today and for this wonderful participation from your side.
Thank you very much, sir.
Thank you, sir.
Thank you, sir.
Sir, success always come with the teacher support and the student preparation.
No, of course.
Thanks for your support.
Yeah, sure. So it's good that you are participating. So that's where you are getting the support. That's good.
I mean the joint responsibility, joint audit, like it's a joint preparation. but
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 respons-
the responsibility is with me, it not fall on you. Here.
Yeah, good morning, everyone. So, behind
morning,
every
ma'am.
successful audit, every balance sheet, and every trusted financial plan, there is always a CA. So, wish you all a very happy Chartered Accountants Day. Happy CA Day, Ajal sir. And we all are doing very important topic, very important topic. The weightage of this, especially chapter number 1 to chapter number 11, is 45% to 55%. That is 52 to 62 marks examination will be asked from these topics, and majority of the students think that they leave these chapters, they found these chapters very difficult, they don't understand standards. So I must say, don't miss these LVRC lectures, because these are really very important for you, and they are going to help you in scoring good marks in auditing. So can any one of you summarize me which standards we read in today's class?
So 240 fraud.
Okay, only 240?
250, 260, 299,
260, 299 and 240.
402.
402. Okay. So what is the name of 299? 290. Sorry, 29. What is the name of essay 299?
Madam, the joint audit of financial statement.
Okay.
Auditor's responsibility in joint audit of financials.
Sorry?
Responsibility.
Prashantji, I'm not getting you. What are you saying?
Yeah, joint audit of financial statements.
Okay. So many students in previous examination wrote only joint audit. So it is an incorrect name. Correct name is joint audit of financial statements. So at final level, it is really very expected from you to quote correct name and number of standards in the examination, and to write the answer. The correct approach for writing the answering the answers of standards is to first quote standard name and number, then the provision whichever is applicable from that standard, then facts of the case, and after that you need to conclude your answer with the facts of the case and relating provisions of applicable with the facts of the case. So I wish you all the very best, and I hope you all are getting benefit from these classes. You all are revising side by side, and in case you still your doubts persist, you can ask us in open house query session, which is tomorrow for auditing, 4 to 5 p.m. on Zoom only. And if still your question is something from today's session, you can ask us. I don't think today is there is any. Only Achal sir has only taken all the queries. All I can see that students are very interactive in these sessions, na?
Yes, ma'am.
They are side by side.
Yeah, he has advised all the pros and cons with respect to all these standards on auditing.
Okay. Thank you. So let's wind up this session. Thank you so much. Thank you so much. Achal
Thanks.
sir.
Thanks so much. All right.
Yeah, thank you.
Thanks.
Thank you for a happy CA day.
Yeah. Thanks. Same to you.
Same
Thank
to
you.
Bye. Thanks. Yes. Oh, thanks. Thank you.